Good morning, everyone, and welcome to NYSE TV Live. I'm Kristen Scholler here at the Stock Exchange ahead of the opening bell. Well, Wall Street will attempt to ride some recent momentum that we've seen into this first week of trade of 2024. Still a shortened trading week, but the first full week. It comes after the S&P 500 snapped a 5-day losing streak on Friday. We got a bounce to end last week, and investors will certainly be keeping a close eye on fresh jobs data coming out throughout the week, including that all-important December non-farm payrolls report that we'll get on Friday. We'll also be paying close attention to storylines emerging from the Consumer Electronics Show, one of the world's most influential annual tech events, inspiring the agenda for the year ahead. Let's take a look at what's on tap over this next hour. Exchange-traded funds made history in the U.S. last year, and the product is making noise globally. Magnus Catton, head of ICE Data Services in the Asia-Pacific region, will join me to tell me what geographic drivers he has seen when it comes to market expansion. Plus, as CES kicks off tomorrow from Las Vegas, we'll have continuous coverage of this year's event on the NYSE TV platform and across our social media channels. Well, sticking with CES 2025, 3M's communication manager will join my colleague Trinity Chavez later this morning to talk about its plans over the course of the week, including the debut of a brand new solution. There's much to showcase this year at CES. Well, joining me now is Magnus Catton. He's the head of ICE Data Services in the Asia-Pacific region for Intercontinental Exchange. Magnus, it's great to have you on the show, and welcome.
Thank you. Thanks for having me here in this iconic building.
Yes, wonderful to have you here at the New York Stock Exchange. And to start, Magnus, could you paint a broad picture of the ETF landscape across Asia-Pacific?
Sure. So Asia Pacific is the third largest ETF market by AUM after the US and Europe. Asia's got about 1.2 trillion in assets under management in US dollar terms. Compare that to the US, which is about 10 trillion US dollars. So there's still quite a big gap between Asia and the US. That said, when you look at AUM growth and you look at flows, Asia Pacific is growing much faster than the other two regions. And according to PwC, they think that by 2028, the AUM in Asia Pacific is going to reach 3 trillion US dollars and be about the same size as Europe. Now, in terms of countries, Japan's the largest ETF market, followed by China. Equities is still the big theme across Asia Pacific. If you look at markets like China, Hong Kong, Japan, and Australia, AUM can be anywhere from over 75% to over 90% of market share. However, with rising interest rates, you've got fixed income becoming more attractive, and certainly that's been a driver of new product growth and innovation. And here, fixed income, your US Treasury ETFs are probably the most popular. And at a market level, Taiwan is the biggest bond ETF market by AUM terms. It's roughly about half of the AUM in Taiwan is in fixed income ETFs, making it the fifth largest bond market ETF globally as well. So if I look at for ICE across Asia Pacific, we've seen tremendous growth across equities, across thematic, and across bond ETFs. In fact, in 2024, the AUM tracking our indices grew by over 80%.
Now, what kind of geographic drivers, Magnus, are you seeing in terms of market expansion?
So, I mean, it's interesting. After 14 years of pumping more than 70 trillion yen into ETFs in Japan, the Bank of Japan in March 2024 announced that it was going to stop purchasing ETFs. So we've seen in Japan a fairly muted or flat growth in equity ETFs, domestic equity ETFs during the course of 2024. However, foreign equity and foreign bond ETFs have shown pretty good growth. And what's interesting there is that most of that money has been coming from retail flows rather than institutional flows. And in fact, I think it's interesting, if you look at Japan, over 50% of the retail assets sit in cash deposits. The government is absolutely determined to convert this cash into products, and ETFs should benefit from this. And the medium term, we should see pretty good growth in ETFs in Japan as well. I think if you look at, say, other markets like
We have a lot of markets, of course. I know that Intercontinental Exchange does focus on Magnus. Thematic indexes certainly are popular. What themes are you seeing an appetite for there?
I think any themes that transform economies are going to be of popular interest to a lot of investors. So things around technology, things around AI, things around semiconductors, for sure, are popular themes. And it's worth keeping in mind that markets like Taiwan, Korea, Japan, and China are home to the largest semiconductor companies in the world. So that's certainly going to be a popular theme, or continues to be a popular theme for the future. I think also fixed income ETFs are going to be a popular theme as well. So I think in terms of anything that transform economies like AI, thematic, and semiconductor will be popular. And really it's retail money that's driving that. So thematic indices and ETFs really are being driven out of Taiwan and Korea, where you see almost 50% of the assets under management coming from retail flows.
Magnus Catton, he's the head of ICE Data Services in the Asia Pacific region. Magnus, so great to have you here at the Stock Exchange. Thank you.
Thanks for having me.
All right, everyone, will stay with us because I mentioned we have a big show on tap, and CES 2025 officially kicks off tomorrow. We're going to speak with one major NYSE listed company that will be showcasing a brand new solution this week. Stay with us.
On this episode of Taking Stock, we are thrilled to have May Habib join us. She is the CEO and co-founder of Ryder. We're going to be speaking to her about how they are bringing generative AI to large enterprises. Let's get started.
We've been in generative AI for the last 4 years, working on bringing generative AI to the enterprise. And what we've learned from folks is they need a full solution. LLMs are very powerful, but not enough to very quickly get to value on these mission-critical workflows.
And you know, you recently announced a $200 million Series C funding with some of the biggest and most influential companies backing this effort. Talk to me more about the partnership and why was now the right time to have this fundraise.
We had some incredible corporates join the round: Salesforce, Adobe, Workday, IBM. And there's a real realization that enterprise generative AI, especially where we're going on agentic workflows, requires a real understanding of these real-world mission-critical flows that is just much more complex than folks thought. And I think being able to stitch together multiple systems, multiple departments with generative AI, rewiring these flows, requires really a coalition. And that's what is so exciting about the Series C that we raised.
What are your plans for this new funding round?
Certainly expand the team, expand our footprint, but invest in this next generation of models, action-oriented models that are capable of autonomous action inside of the enterprise with reliability, consistency, security that enterprises need.
Talk to me about how your past experiences have helped shape the ethos of your company today.
I grew up in a small family business and learned a lot about the importance of staying really close to the details.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here in studio at the Stock Exchange. Well, the NYSE is not only home to over 2,400 listed companies, it is also home to the world's oldest living bond, which turned 400 this year. The NYSE community took the physical bond to the Netherlands to give it a proper celebration. Let's take a look.
To travel with something this old and this rare and this irreplaceable is both exciting and nerve-wracking. Nerve-wracking because if something should happen to it, you cannot get another one, which is the greatest fear of, I think, any archivist. But exciting. You don't get to bring a document like this home that often.
When something turns 400, it's worth throwing a little celebration, and having this bond and having the connection between the New York Stock Exchange and the Netherlands that goes back, 400 years is really something to mark. The thing about this bond, it's basically raising money to repair a dike and build a landing space for boats to land. And the whole community would benefit from it, and increasingly with climate change to, not just combat climate, but also coincide with the changing world.
You look at something like this and you see not only people partaking in a tradition, but coming together for something bigger than themselves. I don't know that many people necessarily think when they buy a bond that they're doing something patriotic, and I don't know that people necessarily think of it that way, but I look at something like this and that's in many ways what I see.
When this bond was issued December 10th, 1624, it's written that every 6 months it's supposed to be brought back to where it was signed, which is where we are today, and presented, and then the interest is given. And so along the margins of it are all the years going back from 1625, 1626, moving on. It's really a cool experience to be part of it, and it's really cool how it is 400 years old, it is history, but it really is tying into a lot of the conversations we're having in Intercontinental Exchange today around valuing climate, valuing water management, and valuing these products that are, in some ways they're the oldest products we have, bonds, but also it's some of the most innovative stuff that's happening in them. If you think about it, we're sitting in the Netherlands, a country that's had to think about water management for its entire existence, but now everywhere it does. If you think about closer to home in the United States, we are seeing water in places we haven't had water before. We're seeing water not in places we used to have water. And so this idea of what can you learn from, a 400-year history, and actually longer, the bond's 400 years old, but the underlying structure that the Netherlands used, is we can all learn from that as the idea of basically coming together collectively as a community to put together the funding, and also not only that, the infrastructure needed to combat or in some ways just redirect climate. We are in some ways looking back to also look forward, and our parent company, particularly Intercontinental Exchange, begins to look at the products we're going to need, not just to track and put data to climate change, but also create the investment products we need to either live alongside it, combat it, or even potentially reverse it.
This one is really a living document. It's not just capturing the purchase of debt from a company or a government. It's capturing that moment and then every year thereafter. So you have the text of the bond itself, of the agreement for how much is being lent, but then all around the edges, every single year that an interest payment was made, you have someone else's hand being affixed to this document. Someone coming year after year after year for, at this point, centuries to engage in the same fairly simple act, but a meaningful act, year after year. And so it's amazing that it's a living document. It's still serving the exact same function it served the day it was written. And that's, in many ways, the beauty of what we're here for, is to still partake in that same act that someone partook in 400 years ago.
The core of what that bond does, or what the markets do, hasn't changed, which is raise the capital needed to do something big and then help everyone hopefully benefit from that, either from what it builds or from investing in it. So what changes around it is obviously the technology, is the data, is the ability to connect things. We have bonds in the New York Stock Exchange that were sold in the Netherlands that were US bonds from the 1700s, but now instantaneously there's a global ability to invest in products and trade with each other and share information and share data.
That's the beauty of this document, is that you look at it and you see the physical evidence, line after line, of that promise kept by both sides for 400 years, and hopefully 400 more. It's an important document. It should get its due and get to see the world and get to come home once in a while.
Truly a beautiful bond. All right, well, stay with us because we will have much more NYSE TV Live up next.
Welcome to Floor Talk. It's great to have you on the show today.
It's great to be here, Judy, and it's a real privilege to talk to you.
So you are the CEO of Agilent.
Yes.
Tell me about the company and what you do.
We're the people behind the scenes that keep your water safe, your food safe. We advance therapeutics, so we test pharma and biopharmaceutical drugs as they're released. So we're the people behind the scenes keeping the world safe.
Now, you held your investor day today at the New York Stock Exchange, and you introduced a new strategy. So tell me about that strategy and what it means for your stakeholders and the industries that you serve.
We're becoming more customer-first strategy, so it's a customer-led strategy led with our markets. So our three main markets are pharma, biopharma, clinical and diagnostics, and applied. So we're really leading with our markets and seeing how we can bring more solutions to our customers and faster innovation across these markets. So we're really excited about it, and we've also launched a transformation in the company called Ignite. And that's really to help with our customers, making it easier for them to do business with us, for employees, making it easier for employees to work and be more productive, of course, and for customers and our shareholders, of course, to continue our growth.
Now, can you share more about these high growth opportunities and the solutions you're providing for them?
Yeah, I can share one really good example. So Forever Chemicals, you probably heard of that, PFAS molecules and compounds. We test for that globally, so it's a big emerging business for us. So we are the ones that help testing labs test for these molecules. And to give you a sense of our detection limits on our equipment, think about a drop of water in an Olympic-sized swimming pool. That's the level of detection we can do for these compounds, and it's, of course, moving to different modalities, so we're there to really test for these compounds.
Now, today you rang the opening bell to mark the 25th anniversary as a public company.
Good morning, everyone, and welcome back to NYSE TV Live. I'm Kristen Scholler here at the Stock Exchange. Innovators from around the world will descend on Las Vegas this week for the Consumer Electronics Show, or CES for short. The annual event inspires the agenda for tech innovation each year, and it's expected to draw more than 100,000 attendees, including many NYSE-listed companies. My colleague Trinity Chavez joins me now with more. Trinity, good morning.
Hey, Kristen, good morning. Yeah, one of the many NYSE-listed companies attending and participating in CES 2025 is 3M, which is rolling out a series of new solutions and advancements. The company will also debut its Digital Materials Hub, a one-stop shop for more upfront digital design, which aims to save customers time and money in prototyping and materials and selection. 3M will also be highlighting its partnerships, which includes its work with GM in robotics and auto manufacturing, as well as its work with optical tech in Lenovo devices. Joining me now to talk more about this is Mike Laninga. He is the communications manager at 3M. Good morning, Mike.
Good morning, Trinity. Thanks for having us.
It's always great to have you join us on the show. Now, I do want to jump right in here. You know, TechCrunch recently highlighted 3M's approach to innovation uncomplicated. Can you elaborate on how 3M collaborates with leading brands to simplify and accelerate the innovation process?
Of course, yeah. I mean, so at 3M, we believe that innovation, yes, it's complex, but it doesn't have to be complicated. And that's the value that we try to bring to our customers. Whether it's in automotive, consumer electronics, data centers, we try to take their problems, we bring it back to 3M, we make a simple solution, and we bring it back to them so that they can do what they do, whether it's on the road, in the home, in the workplace, to make things simpler.
And as CES is kicking off in Las Vegas, tell me more about exactly what your company is aiming to showcase or achieve this year, and how does this align with your broader strategic vision?
Yeah, well, we're here talking about innovation and technology. I mean, that's what 3M's been doing for over 120 years. And again, our theme this year is uncomplicating innovation. And we don't do that by ourselves. We do that next to, side by side, with some of the world's leading brands. You mentioned GM. You mentioned Lenovo. Those are the stories that we're trying to tell, shoulder to shoulder with some of our best customers here at CES. And we're really excited about it. And it's funny because a lot of people might know 3M for Post-it notes, command hooks, Scotch tape, but they might not know that we're in rocket ships, we're in airplanes, we help hold buildings together. A lot of that ingredient technology. So it's really fun to see that light switch go off in people's head when they say, I had no idea 3M did that.
And speaking of the different industries that 3M is impacting, I do want to talk more about that 3M partnership that you recently announced. Talk to me more about how you see this partnership impacting the broader automotive industry.
Yeah, so our partnership with GM, so you think about a car on a manufacturing line. After they paint it, they look for paint defects because there's always these little imperfections. Well, up until now, that's been a very manual process, labor intensive, and it can be very inconsistent. What we've done is we've partnered with GM and some others to make that a automated process. And so you get continuous improvement, you get the same types of improvement every single time. Using our abrasives, using AI robotics, we're able to save time and bring value to GM across their assembly line.
And you know, what has been the initial response so far from your customers, not only with GM's partnership, but also regarding the Digital Materials Hub, and how do you plan to evolve it and post-CES?
Absolutely. So we're using CES to launch our Digital Materials Hub. So what that is we are, say you're an automotive company, and before you would do this crash test, crash test dummies, you'd see what would happen with the glass break, with the adhesive hold. Well, now you really don't even need to do those physical crash tests. We can provide you with these digital material cards. You plug all that data into your system, and then you can see what happens with the shear strength, with the tensile strength. We have all that information on a one-stop shop for our customers, and it's free to use. And we're uploading new products to that every single day. And it saves time on material costs and upfront prototyping. So it really just accelerates that build ratio.
Now we have about 30 seconds left, Mike. I do want to ask you if you're specifically excited about something that's debuting later on this year.
I wish I could tell you more about something that we've got going on. It was a great try. No, I think,
you like how I tried to slip that in there, right? You know you have to come back on the show to share this news with us.
Absolutely, yeah. I mean, I think you'll hear from us in consumer electronics. You'll definitely hear from us in automotive and EV batteries. We're a big player there. So just stay tuned, have us back on, we'll have more to share.
Well, we always enjoy having you on the show. So thank you so much again for joining us today. Again, that's Mike Lananga. He is the communications manager at 3M.
Thanks for having us.
Now, as we continue our coverage of CES 2025 throughout the week, our partner Cheddar is there on the ground. Here's a sneak peek at what's set to unfold this week with some help from tech media platform Tom's Guide. Let's check it out.
We are at the Consumer Electronics Show, CES, and although the show is only just getting started, I'm already seeing some really interesting trends emerge as we head into the next year. It's January, no surprise that fitness tech, health tech, that's what everyone's talking about. We're gonna start right behind me, because believe it or not, that's not Bumblebee the Transformer. That is a massage chair. Wait till you see this. This is the Body Friend, and it's very aptly named because it wants to be your body's best friend. It has a built-in scale with body composition. There are little sensors all in here, so it can analyze your weight. It can also analyze your mobility. It's not just a massage chair. This is actually going to take you through some stretching movements. Think about some older folks who might not have as strong of mobility, not sure how to go through a mobility practice by themselves. The Body Friend can help with that. It has a wireless ECG in the back behind me here. That way it can detect for potential heart issues such as an arrhythmia. And it'll do that while I'm still getting my body worked out, getting my stretching in, and of course, most importantly, getting my massage. Oh yeah, that's the good stuff. We're gonna move on over to the Withings Omnia Smart Mirror Scan concept. We got a smart mirror right here with an integrated display, and it has the scale on the bottom right here. So if I stand up here, it would be able to tell me my activity for the day. It would tell me how well I slept. It would be reading my weight, my body composition, following my heart regularities, my blood pressure even, giving me an overall score about how my wellness is. A big benefit I could see to something like this is that if you live in a so-called medical desert where maybe you don't have access to seeing your medical providers all the time, you're not able to go to the doctor, but you do need very regular checkups, this thing would ideally sync your data to an app, and then you could share that information with a doctor, so you'd be able to do this at home, even if you can't get out to a doctor's office. If you followed Withings for a while now, you know that they make smartwatches, they make smart scales, tons of health tech. This isn't anything new. This is a culmination of tech that they've been working on for years now. We've seen a mirror that scans your body, a massage chair that moves your body. This is a spoon that changes the taste of things that go into your body. So we all are trying to eat less salt. It's very important for our heart health long term, but we love salty food, right? This is the electric salt spoon, and how it works is it creates a very mild electric current that goes through from the back here to the front, through your mouth here, and it'll actually make your food taste saltier. There are 4 different levels that you can choose from depending on your saltiness needs. But the point of this is that you are able to change the way that you're eating, make some small changes day by day without having to make the same compromises that you would for how you like the way things taste. Whoa. I did not expect something called the electric salt spoon to really impress me, but it has. This is quintessential weird CES, and I'm here for it. This is definitely the right time of year for all things health tech, but that's not the only type of tech that we're going to be seeing here at CES 2025. So make sure you keep it locked to Cheddar and Tom's Guide for all the latest and greatest updates from the show.
Well, of course, that definitely looks exciting, and we're going to be covering all of that and so much more throughout the week with our special coverage from CES. Now, I do want to bring in my colleague, Kristen Scholler, back in to talk all things CES. Kristen, I know when we were on the ground there last year, I mean, there's so many opportunities to bring together executives, startups, also well-established companies. Many of the NYSE listed companies that are part of our 2,400 listed community here at the exchange are participating in this event. As you mentioned earlier on, 3M was one of them. BlackBerry is also there, John Deere, as well as so many others. And this is a great place, just to discover new innovations that are impacting every single sector as we know it.
Absolutely. And of course, for our viewers watching, we will have full coverage from CES remotely, all sorts of innovation packages and round-the-clock social media coverage as well this year, as we see that tech agenda for the year be inspired by the innovations that come out of CES. You'll want to stick with us, more than 100,000 attendees, and we will be covering it on NYSE TV Live. Stay with us, though, because up next, we'll have the opening bell.
Someone came to us 5, 6, 7 years ago and said, can you produce a sugar-free or reduced sugar, low-fat or no-fat, plant-based, dairy-free, indulgent ice cream? We could not have done that. Today, we have the high-intensity natural sweetener to produce it with low to no sugar. We have the protein-based ingredients that are non-dairy that can replace the milk or the dairy. And we have the ingredients to help impart a very rich, creamy mouthfeel to make the product indulgent and also prevent ice crystal formation during freeze thawing. And so it's a capability that we've built that has made us much more relevant to more opportunities than we ever have had. The original stevia leaf extract products that came out, I'll call them the early generations, did though have, which is typical in early generation products, had a bitter or a licorice off taste associated with it. Since then, we've been able to develop through using natural stevia leaf extract, enzymatic conversions to isolate the best tasting stevia components. And honestly, they're really great tasting, clean tasting products that are still 300 times sweeter and give you that healthy opportunity to either reduce or completely eliminate sugar in a food product. And then we work from a texturizing standpoint to build back the mouthfeel that's lost when sugar is replaced. And we call that build back texture.
That's looking pretty good. We'll hold you there. Okay. Thank you.
We are officially off to the races here on this Monday morning. The stock market open for trade. It is a shortened trading week. Of course, the market closed on Thursday for the morning of President Jimmy Carter. But we will have a lot on tap, including a major jobs report and coverage of the Consumer Electronics Show on the ground in Vegas throughout the week. Well, joining me now to talk markets is Jeff Crumpelman. He's a chief investment strategist and head of equities at Mariner Wealth Advisors. Jeff, it's great to have you on the show today. And after what was a bit of a choppy start to the year in that first trading session, we're now looking at a second day of gains. How is this setting us up when it comes to equities?
Well, you know, we have been ultra contrarian bullish over the last 2 years, and we've had a great kind of 2-year run. And I think our theme for this year, unlike the previous two, where I think we were set up very good, particularly in 23, coming out of the week 22. And then we thought last year data would continue to improve. This year, kind of the theme is clear air turbulence. I think that the fundamental backdrop looks outstanding. It looks very good. Strong economy, strong earnings, solid earnings, and good trends in whether you're talking about, you know, interest rates or inflation. They're stabilizing at solid levels in our view. Mm-hmm. And the turbulence is going to come from valuation and from what we see in the technical data so far. Mm-hmm. The market looked tired at the end of the year, and valuation's rich. It doesn't mean a meltdown. Mm-hmm. It just means that any news that's less than perfect on the policy front, on the earnings front, on the economic front, I think we're going to have, you know, periods of, 10 to 15% pullbacks or corrective periods on our way to low double-digit returns. You know, 6,600 is our target for the S&P. So we're set up fine, but strap in a little bit is what I'd say.
All right, Jeff, good to get your take there. Of course, we see stocks rising this morning, led by these technology names, on the back of record sales in the fourth quarter for Foxconn, the artificial intelligence space benefiting from that. And then a story in the Washington Post earlier that President-elect Donald Trump is reportedly considering lesser tariffs, more targeted tariffs versus huge tariffs as he promised along the campaign trail. How should our viewers digest that?
Yeah, you know, we've tried, I think as you talk to many people, and I'm sure you've asked a lot of folks about their take on tariffs, and we agree with most that, you know, a la Ted Lasso, be curious, not judgmental. There's so many unknowns. But I think your take, what you just said a few seconds ago, is probably correct. I think that as in 2018, this is more about China. It's more about moving supply chain out of China and national security risks there, and targeted tariffs towards that country. And he can use also executive order to do to place tariffs on China. It's more difficult and will take acts of Congress to do it elsewhere. He can't make the national security argument on Europe and Canada and Mexico. Mm-hmm. And I don't think it's about those countries. Mm-hmm. So I think there'll be, you know, instead of a potential nuclear meltdown, you know, that some folks expect with regard to, you know, inflation risks and tariffs, I think it's more just like, you know, headwinds as you're riding your bicycle a little bit. Mm-hmm.
What do the technicals tell you right now, Jeff? We're talking a bit about the fundamentals, some of the risks that are out there, even as you do see the S&P 500 on a path ultimately to double-digit gains. But we didn't get that Santa Claus rally, and many market watchers do watch the first 5 trading days of January. So technically speaking, what can you tell us based on those inputs?
The percentage of stocks trading above their 50 and 200-day moving average went from 70% or so in those first 10 months of last year, and it looked like, you know, there was risk on, to roughly 20% trading above those levels. So again, that would support being tired. The advanced decline line, the number of stocks advancing versus declining that had been in a nice uptrend, has plateaued and rolled over a little bit, but still in that uptrend. So it doesn't say we're, again, poised for some kind of bear market. It just says, hey, I want to pause a little bit. And also I would add to that, we had broadened through the fall. It wasn't just about Mag 7. It had been about the other sectors. And we've seen a re-narrowing in December and early January. The Mag 7 actually have been a place to be, and they perform extremely well. We think it will continue to broaden through the year next year as we get relief on some of these concerns about policy risk. But it says the market's cautious, and there's some red signals out there, or some yellow signals out there.
Jeff Crumpleman, Chief Investment Strategist and Head of Equities at Mariner Wealth Advisors. Jeff, thank you so much.
Thank you.
All right, well, coming up, one financial expert just revealed 25 habits that will help people save money, especially this new year. She'll join us to talk more about it up next.
Colleen, welcome to Floor Talk. It's great to have you on the show.
Judy, thanks for having me. I'm so excited to be here.
So, Colleen, you joined Planet Fitness as CEO in June. So tell me about your first 6 months.
It's been a very fast first 6 months. I've really leaned into spending time in our clubs and getting to know our franchisees, talking with our club team members and seeing how our members utilize our clubs. I call it feet on the street. It's been really insightful. And we've also worked on our strategic imperatives and kind of codified our roadmap for our growth ambition.
So tell me about your growth strategy and vision for the future of Planet Fitness.
Our 4 strategic imperatives really start with refining our brand promise and then making sure we pull that through in our marketing messaging. We're also leaning into member experience to make sure that we're connecting with our membership and enhancing our relationship with our members and delivering a format both inside and outside the clubs that's most meaningful for them and is going to enable them to accomplish their fitness goals. And then we lean in on format optimization and our equipment mix. And that's making sure that we've got the right mix of equipment for how our members want to utilize our clubs today. And when we get all of that right, and we're thoughtful about unit economics and build cost for our franchisees, it enables us to turn up the afterburners on growth.
Now, how will you redefine your brand strategy and communicate it effectively?
We're growing stronger together, and we're all strong on this planet. We're seeing across generational cohorts a focus on utilization of strength in our members' workout routines and our prospective member workout routines. So as we've done.
Welcome back to NYSE TV Live. I'm Trinity Chavez in studio. Now, with the Fed signaling less rate cuts for 2025 and inflation remaining sticky, personal finance is top of mind for many Americans as they attempt to navigate an ever-changing economic environment. Fortunately, one expert in particular is providing some new solutions. Just last month, financial coach Bernadette Joy revealed 25 habits that will make people save money, invest smarter in her new book, Crush Your Money Goals. Good morning, Bernadette.
Thank you so much for having me.
It's so great to have you on the show to talk more about this topic. Now, I do want to talk about your book, in Crush Your Money Goals. You outline 25 habits for saving money and investing smarter. What inspired you to write this book, and how do these habits differ from traditional financial advice?
Yes, well, I have been doing personal finance for almost a decade at this point, and a lot of the books that are out there kind of put out all this information of things that you need to know, but this book is around habits and things you need to do. And what really inspired me was that I felt overloaded, as many Americans do, about, well, what's the right thing to do? And a lot of us think that there's information out there that's going to, change our whole world. But what we actually need to work on in 2025, in my opinion, is around small habits that can change the trajectory of your finances. And I split the 25 habits into 5 sections, and each of those sections spell out the word crush. That makes it really, really simple for people to follow.
Oh, very cool. And for someone just starting their financial journey, what's the first habit they should adopt to make the biggest impact on their finances?
So since we are here in the new year, the C in Crush stands for curate your accounts. And so if you do nothing else this year but to Marie Kondo your finances and pull all of your financial information into one particular spot, I like to use a tool called Monarch Money. But what I really recommend for people, what I found in coaching so many folks, is that they think that they're not in a great place because they're just looking at their checking account and they're just looking at their credit cards versus their entire financial picture. So the curate stands for pull all of your accounts and really ask yourself, are these accounts working for me? And if any of them are not ones that I really need, to let them go.
Now, many people feel that investing, it can be rather intimidating, right? So what's one piece of advice from your book that you can help simplify the process and encourage people to get started?
Yes. So in the book, I talk about investing being your new luxury bag, and specifically to be able to take advantage of tax advantaged accounts. And so there's this trend that I'm seeing right now on social media where folks who have a little bit of extra money saved up are now funding their IRAs right at the top of the new year, as soon as they were allowed to in 2025. And so even if you cannot max out your individual retirement accounts with your investing, just putting in those contributions as fast as you can in the new year is a great way to start off without feeling like you have to do a ton of other effort. And just by doing that, you're going to save yourself on taxes, either on the front end or the back end, without having to, spend a lot of time doing research.
And with inflation remaining sticky and costs rising, what strategies from your new book are most effective at managing money in today's economic environment?
So this is one that you would not expect in a personal finance book, but it is my favorite. It's called The Screenless Sunday. And simply put, I ask people to put down your phone, put down the iPad, put down the laptop on Sundays, and actually live out in the real world. Because what we found is that a lot of folks are feeling the pinch, not only because they're seeing it in the grocery store, but they're seeing it on their social media feeds. And so in particular, I'm asking people in 2025 to unplug at least one day a week for a couple hours in 2025. I like doing Sundays, so that you can actually, work on the things that you already own, enjoy the things that you already have, and not look towards buying new things in the new year as much as we have in past years.
But for many people, breaking those habits, it could be quite difficult, especially when it comes to breaking bad financial habits. So how do you recommend readers approach this challenge, and how does your book help guide them through that?
Well, this is a bit self-serving, but picking up a copy of Crush Your Money Goals, I designed this book to be an active source. A lot of people tell me when they read the book, or if you listen to the audiobook, that it sounds like I'm with you in the room. And the best way that I know to keep accountable is to have an accountability partner. And so the book is designed to be your accountability partner for the new year. Every section has journal questions that I ask people to also document their process along the way. And documenting your process and your plan for the 2025 year is a great way for you to stay on top of those habits and break some of those old ones.
Now, I do want to talk to you more about your personal motivation for writing this book. Your book is filled with practical advice, right? But how have your personal stories or experiences really shaped how you go about living your everyday life and all the habits that you chose to share with your readers?
Yes. So I am a first-generation Filipino-American. I was the 8th of my dad's 9 kids. I have received no inheritances and don't expect any. And I wrote this book. I was motivated because in 2016, I found myself in $300,000 of debt and no clear plan on how to overcome that. And so I did what most people did. I Googled how to pay off debt, how to pay off student loans. I was in a ton of student loan debt. And I found that a lot of the advice out there didn't speak to me as a female and as a first-generation American. And so I really informed this book not only with my own experiences, but also the experiences of dozens of people that I have also coached. So you'll see tons of stories from other people from all across the country. But most importantly, I think where it's vastly different is we take a special focus on mental health. I personally struggled with mental health for many years, including being diagnosed with anxiety. And so if you're feeling like your mental health has taken a toll because of personal finances, this is probably the book for you.
Very, very inspiring. Thank you again, Bernadette Joy, author of the book Crush Your Money Goals. It's great to have you.
Thanks so much for having me.
Now coming up, if you're traveling to Europe in 2025, you need to add one new item to your checklist before taking flight. Find out what it is when we come back.
and on the U.S. economic.
Colleen, welcome to Floor Talk. It's great to have you on the show.
Judy, thanks for having me. I'm so excited to be here.
So, Colleen, you joined Planet Fitness as CEO in June. So tell me about your first 6 months.
It's been a very fast first 6 months. I've really leaned into spending time in our clubs and getting to know our franchisees, talking with our club team members and seeing how our members utilize our clubs. I call it feet on the street. It's been really insightful. And we've also worked on our strategic imperatives and kind of codified our roadmap for our growth ambition.
So tell me about your growth strategy and vision for the future of Planet Fitness.
Our 4 strategic imperatives really start with refining our brand promise and then making sure we pull that through in our marketing messaging. We're also leaning into member experience to make sure that we're connecting with our membership and enhancing our relationship with our members and delivering a format both inside and outside the clubs that's most meaningful for them and is going to enable them to accomplish their fitness goals. And then we lean in on format optimization and our equipment mix. And that's making sure that we've got the right mix of equipment for how our members want to utilize our clubs today. And when we get all of that right, and we're thoughtful about unit economics and build cost for our franchisees, it enables us to turn up the afterburners on growth.
Now, how will you redefine your brand strategy and communicate it effectively?
We're growing stronger together, and we're all strong on this planet. We're seeing across generational cohorts a focus on utilization of strength in our members' workout routines and our prospective member workout routines. So as we've done.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio at the Stock Exchange. Well, investors certainly feeling optimistic on this Monday. That's, of course, as Foxconn reported record sales in the fourth quarter, and technology names are leading the way. Plus, a report in the Washington Post that President-elect Donald Trump is planning narrower tariffs versus huge tariffs, as he promised along the campaign trail. The concern with tariffs is that it would impact small businesses, it would cause inflation to rise, and that would keep rates high. So investors welcoming this news and the report today. U.S. travelers who are adding the U.K. and the EU to their itineraries will need to add one more item to their checklist, and that's authorization. Starting this Wednesday, the U.K. will expand its electronic travel authorization program. U.S., Canadian, and many non-European travelers will need this to visit the country. It costs £10 or about $12.50, and is required for everyone, including infants and children. Meanwhile, the EU's electronic travel information and authorization system, which is set to go into effect this spring, will cost Americans between the ages of 18 and 70 years old about $7 apiece. Well, joining me now with more is Antoinette Leon. It's Easy.com passport and visa services. Antoinette, it's great to have you on the show today. And what services is It's Easy.com offering it to travelers who will be impacted by this change?
Hello, it's a pleasure to be here. So what we are offering is basically the authorization for the ETA visa. Actually, it's an authorization for travelers for U.S. and Canadian passport holders and non-European passport holders as well. And basically what it is, it's a travel authorization. They do a background check on all of the travelers so that they can go into the U.K. And it's good for 6 months stay for up to 2 years.
Mm-hmm. What's behind this change?
Basically, it's because of the national security. They basically want to know everyone that is entering the country in and out. So it's just basically security for all of the travelers and national security. Really what it's for.
And based on your data, how many travelers on average will this impact?
Millions. It's basically all U.S. passport holders, all non-European passport holders. So it's millions and millions of travelers.
Of course, getting the verification that's needed means submitting the right materials. Antoinette, what are your tips to our viewers to make sure that they have everything properly submitted so that they can get a timely verification?
The best thing to always do is be honest on the application, but also it's better, even though it's an electronic authorization and it could be done online, it's always best to go to a specialized agent. And I'm only saying this because of experience. A lot of the times, a lot of people think that an electronic visa or an online application is very simple, but little do they know a simple, error such as a letter, a number, a digit, or anything like that can simply flag the application, and they can delay and even miss their trip if anything goes wrong. So the best thing to do is you go to the experts. We, as It's Easy.com, we thoroughly check every single application to make sure that it's handled perfectly with no delay, stress-free. The client does not have to do anything except for just pack up their bags and have a nice trip.
And how can our viewers, Antoinette, take advantage of your services at it'seasy.com, including preparing for the cost to make sure that they do have an ease of travel?
The best thing to do is, just make sure that they have their passport is valid for at least up to 6 months. Because that's the most important thing. And if it's not, we do also renew passports as well at it'seasy.com. But the most important thing is to make sure that the passport is valid for up to 6 months.
Antoinette Leone, It's Easy.com, passport and visa services. Thank you so much for joining.
Thank you. It's a pleasure.
Well, in some other news, NYSE-listed insurance giant Aflac recently rang the closing bell at the exchange to celebrate a trio of anniversaries. Our Judy Shaw sat down with the company's CEO and a very famous mascot for more on this. Let's take a look.
Dan, welcome back to Floor Talk. It's great to have you back on the show.
Thank you for having us.
Well, my pleasure, my pleasure. Lots to celebrate today. But I want to start off by talking about your tenure as CEO. You are the second longest tenured CEO in the Fortune 250. You have more than 34 years under your belt.
Right.
Tell me, what are some of your highlights?
Well, certainly I remember I just graduated from college, and I remember coming here to go on the New York Stock Exchange. And I watched us go across, and at that time adjusted, it would be 6 cents a share. And today it's about $110 a share. So it's been an unbelievable return for shareholders. It's been an unbelievable time to see the growth, and it's just been a lot of fun.
Okay, so now you are here today. You're celebrating 3 major milestones. It's the 50th anniversary of your business in Japan. It's the 50th anniversary since your IPO here on the New York Stock Exchange. And it's the 25th anniversary birthday of the Aflac Duck. That's happening on January 1st of 2025. So now let's talk about this one at a time. 50 years in Japan. What has that meant for Aflac?
75% of our revenues, earnings, and assets come from Japan. And so we insure 1 out of 4 households. And everybody knows this fella in Japan because we use him in the campaigns throughout Japan as well. It's really exciting to go to Japan and see we have over 100 offices throughout Japan and insure 1 out of 4 households.
All right, now 50 years on the New York Stock Exchange. How much has changed for shareholders over that time, and how have your priorities changed?
We've gone from adjusted 6 cents a share to today about $110 a share. So great return for the shareholders. We've also give back. One thing that we do is we have a stuffed Aflac duck that we sell for the Aflac Cancer Center and Children's Healthcare of Atlanta. and we've donated over $185 million to that cause. And it is making a difference in the lives of children and their families, and that has been very important to us.
You took a risk back in 2000 when you decided to go with that campaign. What were you thinking back then, and how has that impacted Aflac, and how has it changed advertising in the insurance industry?
Well, when we started, and we wanted to get name recognition, and we tried for about 10 years, and we ran the traditional ads, and it just didn't seem to work. We couldn't move the needle much, and I said, I'll try anything provided it's in good taste. And so they came up with this fella and said that we ought to try him. And I was a little bit scared because you're really making fun of your name for the duck to quack Aflac. But it ended up being something we tested. The numbers came through the roof, and sure enough, it hit home. And within a matter of 3 years, our name recognition had gone from basically 3%, 5% to 90%. And our sales tripled within a period of about 7 or 8 years.
That is one well-behaved duck. Happy to have him here at the Stock Exchange. All right, well, we are just about 60 seconds away from the end of our show, and I do want to bring in my colleague, Trinity Chavez. Trinity, of course, as we always do, we'll be talking about the markets behind us on the shows throughout this week. It is a shortened session. The Consumer Electronics Show kicking off in Las Vegas, your hometown, tomorrow as well. And I know you have a big interview with Gary Shapiro that we'll be watching for tomorrow. What can you tell us about that?
Yeah, absolutely. I'm really excited to speak with Gary later on, and we're going to air it in tomorrow's show. As you said, he is the president of the Consumer Electronics Show, and I do want to point out that this is probably, arguably, the largest tech conference to happen in the world. Over 100,000 people attend this every single year in Las Vegas. I think last year when I was covering it, around 138,000 people were in attendance, and they're expecting more this year. I'm going to be speaking with Gary about who's attending, along with a long list of NYSE listed companies who are going to be participating as well, and all the new items that they're going to be showcasing there on the ground, which we will be talking about here at the exchange, and what he's most excited for, and how they continue to innovate this conference every single year and bring together some of the greatest minds and entrepreneurs in various spaces to continue to disrupt industries.
Absolutely, really inspiring the innovation agenda for the year. We'll have all that coverage here on NYSE TV Live. And that's going to do it for today's show, everyone. For Kristen Scholler, Trinity Chavez, and the team, we'll see you tomorrow.
Thank you for being innovators in the market. Thank you for all you do every day to show the world what best in class truly means.
We are incredibly proud to join the ranks of other highly successful companies who partnered with this legendary institution.
What a time to be here. I am so proud of what we're doing.
This is a huge milestone for our business. There's a lot of people responsible for getting to where we are today.
We have a role to play in bridging the gaps that exist today between us.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. I'm so optimistic about what lies ahead. It has been a privilege to be with you.